Hi everyone, so today I'm going to be covering a new company. It's called Renesas Electronics Corporation. It's a Japanese semiconductor company. So this is going to be a stock analysis, so let's get right into it. Alright, so just to quickly look here. So this is the revenue for 2024. So their earnings report, they came out in July. It's not that recent, probably one is going to come out sometime in the next few days, but I wanted to still cover the company because it looks good. So overall, this is their revenue. Looks good. Year over year, at that point, was down 2.7%. So the stock isn't doing that well far this year. And just primarily, for those of you that may not know, they make most of their money in the automotive industry and with AI applications and electric cars. So that's how they really make bulk of their money. They're a semiconductor company, a chip company. And then of course they have industrial infrastructure that includes communications, that includes those types of things, Internet of Things. One of their biggest competitors is NXP Semiconductor, also Texas Instruments as well. And this is the quarterly revenue trends. Like I said, year over year, minus 2.7%, quarter on quarter, plus 2%. Automotive is increasing year over year 18%. Pretty good. And this is the gross profit margin, the operating profit margin decreasing a bit. Free cash flow has, of course, been super cyclical. We're going to get to that in a second on Yahoo Finance. But this is the inventory free cash flow here. So in 2020, that had 185 million. 2021 was 255 million. 2022 was 391 million. 2023 was 367 million. And now it's 304 million. So it close to double from 2020 to now. You know, it's pretty good. That's not bad. I like to see more consistency, but of course, as a semiconductor industry, you're gonna always see huge super cycles in this. We're gonna check next my DCF, and it looks absolutely amazing here. Just based off historical growth, 9%, 3% terminal growth, historical 73% undervalued, and then if we check Wall Street forecast here, it is 45% undervalued. So either way, however you slice it, undervalued, looks good, and Tipranks, I believe, is going to come more in line with the Wall Street forecast. They're saying it's 56% undervalued, or 56% upside, currently trading at $13 a share, 3 buys. Not a lot of analysts are covering it because it's an OTC stock. It's in Japan, so it's more niche, but it is still a big player in the semiconductor world industry. And it is doing quite a good job in the automotive space. So yeah, just something different to cover for those of you that may not know what it is. All right, thank you.